All right, let's go. Well, that's been another week of, I mean, I'm calling them week of nothingness because a whole lot is clearly not happening. Volatility is pretty low. You still have some swings if you are looking at the market intraday, but really, when you put things into perspective, it's some of the most quiet days we have seen so far this year. Most likely, some of the most quiet days that we will see throughout the year. We're starting September in about 1 week now, and even though in the newsletter I've been pretty explicit on the fact that it can stay low for a long time, we'll do a similar call than we did last week. Let me push Zoom away, where we'll try to balance both views, right? So on one hand, obviously that's what I've written in the newsletter today. Stuff can stay low for quite a while, right? Like last year, we actually got almost surprised by the fact that the Lovell regime carried pretty far into September, right? Like the quarterly option was fairly quiet, the late FOMC was pretty quiet, and then all of a sudden things started to come back early October. I can't even remember the reason. Actually, I think it started with Bitcoin stuff, if I remember well, something like that. That's what comes to my mind. Anyway, that needs to be checked. So I'm not saying that this year is going to be a perfect repeat, but at least we need to make sure that even though we are on those readings here, right, 15%, 15 in the VIX, um, and although we haven't seen these readings for a long time over the last 2 years, seeing them for an extra 3, 4 weeks into September, maybe part of October, is not totally unreasonable. You have the midterms that will happen early November. Markets usually are pretty quiet ahead of volatility can go up, but markets usually tend to be quiet ahead of elections. Not a whole lot happens. If we refer to the last presidential election, it was in the month of September that things got a little bit agitated. But remember that you had the beginning of, I mean, wasn't exactly the beginning, it was already 1 year on, but it was acceleration of tension between Israel and Iran that helped moving the market a little bit. But overall, things were quiet. Um, we'll talk about catalysts, right? But um, if if we are looking for some sort of justification as to why we could stay here, look no further than volatility dust cluster. It's low right now. The market is not stupid. If market is putting VIX, 15 ahead of PC, Jackson Hole, Nvidia, and all that stuff, like what if you play like incomplete the game of incomplete information, what it means is we'll need a whole lot to get surprised by this stuff because overall we kind of know what's going to be said, right? What's going to be said. Wash is probably going to say that it will hike rates at some point and it's going to stay data dependent and he doesn't want to show his card to the market. That's pretty much what he said last time. He's probably not going to face too many and too harsh questions. So unlikely that we'll learn anything new here, so that push things back to the FOMC. PC, well, they've been on the way down. Why not being on the way down again? Let's see. And then Nvidia, yeah, it can be a market mover, but that's what I try to write on the newsletter. Is it going to be a market mover when it brings you back to 16, 17, and then on Monday everything's forgotten? Or is it going to be a market mover when you go back to 2021 and then yeah, you have to go back to work? The truth is I don't have the answer to that question, but um, I'm trying to put into perspective the fact that realized volatility is low, VIX is low, and people will start to get angsty, starting to think that it's too low, that it should go up, and well, it doesn't have to go up. It can stay there for a while because yeah, all of these views are pretty much priced in, right? Same idea for VVIX. I don't even want to spend too much time here. I've seen something like 86 this week, so same idea. Was sitting here. In the grand scheme of things, by the way, 86 is not that low in VVIX, right? Like when you look at the distribution since 2007, this is where 80 is. 86, you're really into the middle of that second mode. We talked about this multiple times. You have two modes in VVIX, one at 100, one at 90. So 96 is on the lower side, but it's not crazy low either. It's low over the last, for anything that's been observed over the last 2 years since Trump got elected. And therefore, you can, and that's still my preferred scenario right now. What is the likelihood that we stay here? I just started the call saying you can't completely disregard the fact that it can stay there for another 3 weeks, 4 weeks. But last week I was showing that statistic. I could have written about this in the newsletter, but I didn't. Maybe next week. About two-thirds of the readings since Trump has been elected are between 15 and 20 in the VIX. So, okay, it's still August. Let's give it a week, maybe 2 weeks, maybe 3 weeks. And the likelihood that at some point you have something that triggers the market, brings them back to 19, 20, and then you start hovering again in that like 50th percentile, which is around 17, 16, 17 is pretty high, right? That seems to me like a very reasonable scenario and something that you can reasonably expect to happen once, maybe twice over the next month. Obviously, if you have a new catalyst, if you have a new piece of information that triggers the market, then we can readjust our scenarios. But resist the temptation of thinking that we're 15 and that's really what I want to insist on, right? Like you open the FT, and I'm the first one also talking about that. So sometimes being a trader is being able to hold multiple opinions at one in your head and understanding that things will happen on their own time. And I agree, right? That bond stuff is a little bit concerning. Uh, I personally start to see stuff on the AI thing that yeah, they're a bit funny. A year ago I would have said yeah, that's nothing, but now like yeah, you can pretty much get some financing against some GPU hours that you might be selling in the future. That sounds like some weird asset back securities. We tried that somewhere 20 years ago. That didn't end well. Does that mean that's going to blow up in the next 4 weeks? I don't think so, right? But yeah, you have to keep an eye. You have to keep an eye on these things. All in all, where are we if we have to sell options? So on Friday, we ended up not selling anything. I was contemplating selling a little bit on SPY on Friday and then say to give it a day or two, basically just go over the weekend. But this is where we are, right? As realized volatility is collapsing, we have realized about nine over the last 3 weeks. If it wasn't for the last week of July, that was pretty agitated, right? This is where you had the big FOMC reversal, situational awareness situation. That stuff would be basically below 10, right? So let's see what next week's gonna happen. But realized volatility, you always measure what happened in the past over the last 30 days. If nothing special happened this week, I'm pretty sure that number is going to get below 10, and then those forecasts are going to slightly readjust. Right now, we still predict the long-term average, what we've seen over the last 6 months or so, which is, yeah, somewhere around 12 and 13, which again, in realized volatility land, that's not a whole lot, right? Like you have about 11 right now, you can get much lower than that, and then for extended period of time. So 12, 13 is not high. Like you start to be high, and again, fund managers, people that manage money overall, they will start to pay attention once you pass 15. At 20 realize, well, yeah, they definitely pay attention to it. So you have to think something like what we've seen in April of this year. Definitely not that kind of market right now. And again, I agree, the catalysts are there potentially, but until the catalysts materialize themselves, it's just, I wrote that today, It's just speculation. So realize on the way down, VIX is not moving much lower than 15. So it looks like basically the lazy summer of last year, except that the lazy summer of last year started much earlier. You ended up having 6, 7 points for almost 2 months. We don't have 6, 7 points yet, but sometimes last week we saw 16, I think. 16 when you have about 4 points at 35, that puts you at 5, 6 points potentially in session. I've said that multiple times. If you sell 6 points of VRP in SPY, I'm not saying you cannot lose money. Trading is extremely path dependent. You have a great example of path dependency in the newsletter, actually, on the IWM trade we did at the end of last month, where you had a very wide VRP, but because of the super strong rally we had early in the week, early in the month, sorry, that trade ended up being a scratch. So 6 point VRP, you can still lose money. That's not the question. You just need the right path for it, but it's just simply much, much harder, right? Like every day that time passes and realized volatility doesn't get to 15, 16, well, then you collect data, right? So you collect data, time passes, and then you pretty much make money. Obviously, the path has to cooperate as well. No strong trend or not slow trend that end up challenging some of your strikes. Can we get to 15, 16? I'm not saying it's impossible. I'm saying that like if the market is pricing realized vol over the next 30 days at 15, no one in their right mind would sell you 15 if they think that it would go above 15 right now. And if the market collectively would think it would be above 15, then you'd probably see a higher price. Now, the market is extremely good at readjusting its prior in real time. So as I often say, you need to pay attention to what news are hitting the marketplace, how the market reacts to certain things. But if you need something concrete from me, here is the kind of stuff I will pay attention to until I see a day where realized volatility is significantly above 20. So basically, what I mean by that is realized volatility measured just for one day, right? Like this is measured over the last 30 days of trading. This is measured over the last 3 weeks. So that's mostly August, right? August has been really quiet. And this is the last day. So that's the session on Friday. For a session on Friday was 11. Um, I start to pay attention to what happened in the session, and I start to say that it's a busy session when you see something above 25. Below that, like you have plenty of sessions where it's below that. Let's actually have a look at what it would look like since the beginning of the year. So yeah, the last few times you would have seen really high numbers would have been, yeah, you see. So that's end of July, right 25, right on 25. And that's not even the FOMC day. That's the week before the FOMC. And I don't even remember what happened on that day. That would have been 30th. So yeah, 30th is definitely, that's the first day before the FOMC. I don't remember. It's just that, yeah, I mean, I guess it was July. July, you had all those wild swings in tech. People were a bit angsty. So whatever, not doesn't really matter. Yeah, same in June. We had some wild back and forth, up, down in June. Otherwise, May was really quiet. You had a few heavy moments, obviously in April when you had the ceasefire announced. Oh, that's the night where Trump said that he would destroy Iran civilization forever, whatever he actually wrote that day. So yeah, so day like this, 50 realized well, you want to pay attention. You obviously want to pay attention so because volatility clusters as well, right? Like you can see, even though it's pretty noisy, you can see in charts like this that it tends to go up, and then cluster, and then you're gonna have moments where, so that's April, that's March this year, where okay, it's gonna be above 20 for a few days. Okay, if we start to see above 20 for a few days, I'll start paying attention to it. But until that, 10, 11, 12, those are sessions where nothing's happening. We had six 2 weeks ago. Yeah, that makes sense. It was pretty insignificant. So yeah, like pay attention what's happening on Monday. Does Monday look like 16, 17? Does it look like 8? I think Jackson Hole is on Thursday or Friday. The main speech is on Friday, I think. But Wash has already pretty much said that he's not going to say much. Nvidia is on Wednesday, so let's see what happened on those daily things. But yeah, like I wanted to give you guys something concrete. That what concrete thing I will pay attention to is okay. Do we have one daily and maybe two in a row above 20, 21, 22, and then one significantly above 25 for us to start potentially considering that stress is coming back into the marketplace. But below that, before that, yeah, it's pretty much noise. Contongo is pretty healthy here. Vol is same, right? It's pretty much mid-range on SPY and then the Qs, but no, the Qs actually is low, but SPY and IWM, it's right at zero. So nothing crazy to observe here. Just means that like, yeah, don't be surprised if it takes 2, 3 points in one session. But what it means is it's unlikely to take 5, 6, 7 points in one session either, right? So that should be helpful when you have to sell potentially 15, 15 and a half, 16, because the the thought that comes to your mind is, okay, well, I sell 16, but I've already seen 22 and I know it can go to 22. And I'm not saying it cannot go to 22. Once again, with the right catalyst, it will go to 22. But on one hand, the catalysts are not necessarily there. And second hand, the data are pretty quiet. Yeah, like if you sell 16 and it goes up to 18, that helps you manage your risk, essentially. Like you have, I think, 2, 3 points of vol to be aware and to be mindful that could go against you, but 6 or 7, not in this type of market, right? It's still a pretty calm, pretty quiet market. It goes from positive VRP. So positive VRP means green flight to go sell variance. Don't think too much about it. When it's calm, just mean that the realized volatility is pretty low, pretty much. Volatility overall is pretty low and nothing's happening. It's been a month. Um, yeah, that's a good reminder, right? Last year it lasted, yeah, well, from mid end of June, let's say, to early October with a few episodes, a little bit scary. I'm not saying this is what's gonna happen this time, but yeah, just be mindful that it can stay like this for another 3, 4 weeks, 5 weeks, whatever. I talked a lot about the queues early in the summer because the situation in the queues were um, yeah, I think it was reasonable to call it scary, right? You had realized volatility at 30, 31. That was at the same level of August 2024. That was rising dangerously and obviously we didn't go as high as what we've observed during Liberation Day, but 30 in the queues is not nothing. And since then it cooled off, right? It took the entire month of July and overall the summer to cool off back to 2021. It's still on the higher side, but it's not anymore on the side where I'm going to be thinking, well, I don't want to be involved in anything tech at the moment because yeah, if you're at 30 and you have, I mean, that was the case 6 weeks ago, you didn't have like clear signs that things would come down. You can go quickly from 30 to 35 because that's usually how volatility behaves, by the way. It rarely goes politely from 30, 31, 32, 33. You never know what can happen, and you wake up one day and then, yeah, it's at 45 and now you're in big trouble. So didn't want to touch that. Now it's back at a reasonable level where, okay, 20 realized vol in technologies, it's high, but it's not sensational. So I think it's okay to slowly get active again in there. The only thing is not now, because although that VRP term structure start to look a little bit better than what it was for the entire month of July, yeah, you're asking for trouble, right? If you go sell 1 point VRP in the queues, we've been talking about you just need one catalyst to bring realize or VIX from 15 to 2021. If this was happening, the queues would definitely not be as forgiving as SPY because there's still a lot of movement. Very very regularly, I still see it opening up -1, +1, then it reverts in session. But yeah, like you don't have a wide margin for error in the queues. Just be a little bit more patient. The interesting bit is we're forecasting it to keep cooling off. So maybe another week or two, and then things will start to look. Um, I was about to say good again, but at least better than that, right? And let me be clear about something as well. When we make prediction, I think I showed that today in the newsletter. Let me bring this back up because I think it's important for me to clarify this. Here, we pretty much make what this means once again is we expect implied volatility that we would sell today to exceed subsequent realized volatility. Obviously, this is the risk that you sell insurance against, right? Some people are buying that insurance from you so that if something happened over the next 30 days, you would be paying the claim. So really what we're trying to understand is the price we're selling today likely to exceed the risk that we will see over the next 30 days? Overall, we think that overall it's likely to exceed the risk, right? 60% in the diamonds, 57 in spiders, IWM 56. Here you have a long, but 46%. So technically speaking, it's pretty much the opposite, 54%. So the model tend to lean on the short side, but it's not some very strong numbers where you want to be actively involved, right? Like the numbers the threshold we usually start to pay attention to is much closer to 65, 66%. It doesn't mean that if you go in SPY right now, IWM right now, you're going to lose money. It's a probability. It's flip of a coin, and a coin slightly biased toward the short side because overall, usually people that sell options tend to make money more often than people that buy option, and we just spend 15, 20 minutes about talking about that. This is what you have to overcome no matter what. So this aligns really well with the fact that you have 57% chance to see implied volatility exceed subsequent realized vol, because if you just take current implied vol minus realized vol right now, well, you need to overcome a tide of 4 points. So it's more leaning on that side. So if you want to go sell those options, absolutely go sell them, but just be mindful with the fact that you don't have a strong edge right now. So if you have to be involved, that's not the moment where you want to put some big sizes, because if something happened, yeah, you've just created almost three problems for yourself because you didn't have a strong edge. You're going to have some situation where the edge is going to be stronger. That's the moment where you want to size up your exposure. But at the moment, sizing up your exposure, it's probably not the best. What we do see collectively for all of these tickers, and this is where, okay, you have the catalyst, you have what you read into the media, and then what the data says. let's see what's going to happen in the end. But right now, all of those models are pointing towards realized vol overall going down over the next 30 days, and implied vol going up. But again, without strong certainty. So it's that weird situation we're in right now where things are calm and quiet. You just need one headline, one little something to get things agitated again. You're probably gonna be making money if you can't scratch. I mean, if you can't stand still on the side, and you absolutely have to scratch that itch to go place a trade. If you sell 20 delta stronghold in SPY, you're probably gonna be making money, or at least be able to scratch it. But it's not the best situation, and you probably want to wait for it. The last few weeks, we've been talking about bonds as well. The VRP was much more pronounced in bonds the last 2 weeks, and then this week it doesn't look great. Same if you look at the probability table. It's not amazing. It's 59. Again, you're probably gonna be making money, but not something I would advise to trade as is. And the main reason is because Realize exploded last week. We had like quite a reversal again, yet another one. I think I saw 81 in TLT, then we went back up to 83 or something like this to finish at 82. That start to be quite a bit of movement. Is this announcing something? I don't know. I'm not going to be commenting on that. The one thing that's interesting is that vol of vol in the bonds is high, right? Like if you look at this is the last 2 years, we're on the higher side. It's not like crazy high, like Liberation Day high or Iran war high, but yeah, it's on the higher side of the spectrum, and you want to pay attention a little bit to it. We're definitely forecasting realized vol to go up. So yeah, I know that some of you guys have some short vol exposure in there. Maybe you want to take off some of it, especially because you never know what FOMC is going to be like, what Jackson Hole is going to be like, and how ultimately the bond market is going to react. If you have some strong views and even edge in trying to predict these things, absolutely, then if anything I say right now it becomes irrelevant. But if you are more on the cautious side when it comes to macro commentary, doesn't mean I don't listen to it and I don't pay attention to what the market actually is paying attention to. But I'm not going to say, well, Wash is likely to say that, so the bond are going to do that, and therefore this is how you should be positioned. That's not my game. My game is pretty much telling you guys, yeah, for 2 3 weeks it was great selling bonds. I saw a lot of you in the Discord actually hammering that TLT thing or ZB. I think that was great. Right now, maybe you want to turn it down a little bit. And our good friend Uzo was back at 85, 86. Just implied vol is not buying it this time. It's funny because over the summer, especially a month ago, right, we went back at some point to almost 90 in Uzo. That propelled implied vol much higher, but this time, I don't know if it's people are in holidays or whatever, but we're back to 85 in CL. Sorry, I said Uzo, but I was talking about CL. Here we had a big spike back to above 90 in CL for a few days. Then it diffused. I think at the close on Friday I saw 85, 86 if I remember well, but implied vol is just simply they just simply don't care. So it goes back to what I was saying in introduction. Obviously, we know we talked a lot about wash, inflation, and stuff like this. Some people will say, well, the war in Iran is not over and anything can come back and things can escalate again. And yes, of course it can. But right now, if you compare the market reaction about a month ago when you had the last spike, I mean, spike move up in oil compared to now, like I don't think you should ignore the signals. People are not buying insurance again. People are not buying as much calls in oil as they were doing a month ago when you had again some rhetoric of some potential tension or whatever that was driving the price up. Um, so if you're still thinking things can explode, it's a free market. You can just be mindful that this may not be the current opinion. Be also mindful that if you're selling those calls and if actually something happens, you're not well compensating at the moment. VRP is not crazy good at 30 days. If you have to do something, it's in the short dated expiries. So probably probably more have to use Uzo literally because I think Uzo has three expiration a week, I think, or otherwise it's CL. CL has daily options. They're not particularly liquid and agitated, but they still do exist. Um, but yeah, if you use MCL and those product and you wait a month at the moment, even if you go on the call side, I mean, you probably need to go very far on the call side to get something. But if you go really far on the call side and actually something happens, then you're gonna get a lot of Vega exposure in your face. That's not gonna feel nice. So probably not probably not great. So once we've said that, what do we say? Well, what we say is if you trade any of those, just be very mindful of your size, and otherwise you don't need to trade. I know it's frustrating. I know we haven't put a lot of trade in the Discord over the last 3 weeks or so. Although this week we've been a little bit more active. But yeah, you don't always have to trade. Do not create today the problems you'll have to manage tomorrow. If you don't have strong reason to be active, don't be active. There's still a few days of summer left in Europe for those that are in Europe, so just make sure you can make the most of them. That's it. If you guys have questions, I'm happy to answer.
Yeah, Alex, hi. I hope you're well. I got here a bit late, so sorry about that. Probably a stupid question, but for Qs, why can't we not go long vol in the short for short for say like overnight or something?
Yeah, you can. Right now, VIP is deeply negative in there. But go in the super short dated stuff, right?
Yeah.
1, 2, 3 days. I think it's reasonable. You have Nvidia in a few days. Don't go at the money. Go probably 10 days. Basically, just buy some gamma. I think buying some gamma in the queues to a certain extent in SPY that still makes sense, right? But you remember like 2, 3 weeks ago, you had up until I think it was up to 14 days. Everything here was deeply negative, deeply red. Now you just need to go much closer, which is not great because it means you almost have to come every day, go buy a 10 delta strangle in 2 DT max. That's annoying because you have to do it over and over again. But no, I don't think it's a bad idea to do it, especially if you're trying to hedge some gamma, then do that. If you're trying to speculate on the fact that something terrible is gonna happen, I mean, yeah, you can. Just don't bet your bankroll on Nvidia or Wash or whatever. Now I say that, and then something amazing happened over the week. You guys gonna say, look at Alex, he got it wrong. Yeah, okay.
I've got exactly that on, like August 31st, like basically just long gamma.
Yeah,
Um,
exactly. I
but
think.
I took a bit off when like effectively made the trade free, so it's just sitting there. But
Yeah, I think that's reasonable. If something happens, it happens. But it's just not the scenario towards the markets leaning to, and it's not really what the data are showing at the moment.
yeah,
I
and it was interesting. So I used the I was looking at stuff on the vol surface. It was a couple of weeks ago actually to look at where things look cheap.
Yeah.
So I kind of yeah, what what expiry, what. So I can't remember. I think it might have been 20 delta actually, and probably then it was about 20-25 days to expiry, and it was to cover that period, right? It looked cheap relative to the potential um, event stroke jump risk. So
Yeah.
hence putting it on. So yeah, that's
Yeah.
that's what I did, and
Yeah.
then
Yeah.
took
Yeah.
took half off when they doubled. So yeah,
Yeah. So here we didn't talk much about the vol surface, but it's true that 2 weeks ago that vol surface was really skewed on the core side.
yeah,
It has like rebalanced now, right? Like if you look at skews 2 weeks ago, this part would have been completely blue. I think I posted the chart in the newsletter the last 2 weeks, but not that week. Now it's rebalanced again. So again, we don't want to like see signals everywhere, but it's and even VRP wise, if you so this is this score over the last 3 months. It's not expensive, at least in SPY. It's not crazy expensive, right? You have this score zero-ish, but it's not crazy cheap either. So if you see 16 and a half, of course, Sam, like go buy some stuff in 3 days. I think it's fine. But if at some point you see 16 and a half, 17, and it's not it's not a news and it's not a catalyst that makes you question like, okay, is that stuff going to be front page news for the next 2 weeks? And usually you know that by looking at realized volatility over one day. If market really get crazy over one day, then yeah, you don't need to trade. But then otherwise, yeah, 16, 17, that's gonna give you 4, 5, definitely 5 points, maybe 6 points VRP. I'm not saying you cannot lose money. You can always lose money, but if you see 16 and a half right now, you're probably going to be able to extract something out of that over the next 2 weeks.
Okay, yeah. So one last thing. So would you go? Would it be a long straddle position or a strangle? If I was going to go for, say, the Qs going long.
I mean, it's it's a preference. If you buy at the money, you are max theta exposed. So if nothing happens, it's expensive. And you need to be in front of it to potentially recenter it when things happen, right? Like if it moves from 50 to delta 20 or 70, then you need to take that straddle off, recenter it to 70, and pretty much extract gamma that way. It's expensive in terms of time, it's expensive in terms of commissions, and yeah, it's an operationally expensive trade. I personally prefer go buy tails, so 10 delta or something, and then wait for an actual move, like a home run, basically, and then I'll monetize them when they start to get much closer to my strike, rather than having to just take that 50 and move it across. It can be fun. Some for people that like to trade, it's probably and like to be active. It's definitely more fun and interesting to do it with 50 delta. I don't think there is fundamentally a better way of doing it, because both ways are pretty much. I mean, that's if you really wanted to extract gamma, that's not really how you would do it, right? You would probably buy a strip of options anyway, and then you would rebalance with futures. That would be the cleanest way to do that. But for retailers, once again, that's going to be expensive. you have to buy a lot of options, and then you have to rebalance constantly your deltas with futures. Not something I would advise to do. Also, that removes a lot of the fun because you see your theta bill really high very quickly, and you see that value going down, and it's not fun. So if you have to do it with a delta at the money. If you don't want to think about it, just go buy a delta 20. So it's really your a delta 20 stronghold. It's really your preference. How much time do you have over the next 3 days? That's the question you need to ask yourself.
Okay, great. All right. Thank you for that, Alex.
No worries.
Yeah. So just to chip in there, what I tend to do is exactly that. On the long side, I'll try to get max gamma. So I'll be short term, as convex as I can.
Yeah.
On the short side, I tend the other way, right? So I'm more closer to the money.
Yeah. Yeah.
So yeah, that's just what I do. And
Yeah.
like I say, I also like try to, because they're so short, I try to cover the costs of carry as
Mm.
they're bleeding by trying to take some off to cover that. And which is a thing that came from when I was doing Delta One future stuff. So yeah.
Yeah. Yeah. Yeah. That makes sense. That makes sense. So yeah, again, like it's a preference. Whatever you feel comfortable doing. I don't think there is one much better than the other. In any case, yeah, you're long option and you need to make sure that something happens. If nothing happens, in any case, you'll lose money. Cool. Anything else? Well, thanks, guys. I see you in the Discord. Have a good week.
Thank you. Bye.
See you.
Bye, guys.